Day 15. Your greatest enemy is in the mirror. We have explored the emotional extremes of the market and the futility of prediction. Now, we arrive at the most personal and perhaps most important lesson of all. The ultimate obstacle to your investment success is not the market, the economy, or bad luck. It is the person you see in the mirror. The field of behavioral finance has shown us that we are not the rational, calculating beings traditional economics assumed. We are wired with mental shortcuts, biases, that served us well on the ancient savannah, but are disastrous in the financial markets. Let us name a few of these inner enemies. Overconfidence makes us believe we are better than average at picking stocks or timing the market, despite all evidence to the contrary. Loss aversion is the powerful feeling that a loss of $1 hurts twice as much as the pleasure from a gain of $1. This makes us panic sell during downturns and hold on to losing investments for too long, hoping to break even. Recency bias tricks us into believing that whatever has happened lately will continue forever. A bull market feels like it will never end, and a bear market feels like a permanent collapse. And perhaps the most powerful of all is the herd instinct. It is deeply uncomfortable to be going in the opposite direction of a crowd that seems confident and euphoric, or to be buying when everyone else is fleeing in terror. Our brains are hardwired to find safety in numbers. But in investing, the crowd is usually wrong at the extremes. These biases are the real silent killers of wealth. They are the reason the average investor's returns are dramatically lower than the returns of the very funds they invest in, as studies like the Dalbar analysis consistently show. We are, in essence, our own worst enemy. So, what is the defense? How do we defeat an opponent who shares our every thought? The answer is not to try and become a perfectly rational robot. That is impossible. The answer is to build a system that protects us from ourselves. This is the profound genius of the indexed, long-term, automated strategy we have been constructing. Index investing is not just a financial strategy, it is a behavioral shield. It is a pre-written set of rules that you create for yourself in a moment of calm rationality. By automating your investments, you disarm overconfidence and market timing urges. By holding a diversified portfolio through every cycle, you override loss aversion and recency bias. By sticking to your plan when the herd is stampeding, you achieve true independence. Your index fund portfolio is more than a collection of assets. It is a cage for your own worst instincts. It allows the sensible long-term thinker in you to lock up the impulsive, emotional reactor. You are not trying to beat the market. You are using the market to beat the person you were destined to be without a plan. With our mindset now fortified, we will begin to explore some advanced but sensible ways to refine our system. Thank you.